Welcome, everyone, and thanks for meeting with us today on this valuable webinar where we're going to learn about the student debt solution for all loan originators. I'd like to introduce today's guest speakers, Dave Danielson, who's the CEO of eFiscal Networks and Resolvent LLC, and a developer of student debt solutions, and also Melissa McGuire, a 10-year certified counseling expert about student loans and also co-creator of Student Debt Solutions.
Thank you so much, Pam. Thanks everyone for joining us today and for viewing this information. We hope that you find it very valuable. So first, let's get to why we are here. There is a big problem. 40% of first-time homebuyer clients have student loan debt. And even bigger than that is over half of all student loan borrowers are not in an income-driven repayment plan. Income-driven repayment plans allow student loan borrowers to use their income to set up a monthly payment. And this can really reduce the amount that their monthly payments are. And so we only have a small portion of student loan borrowers actually taking advantage of income-driven repayment. These can help things like our DTI. Over 8 million borrowers have the SAVE plan. This is a form of an income-driven repayment plan that was introduced in the last administration through the Department of Ed. There's been some legal challenges with this plan. And so if you are a current borrower, if you have a client who has the SAVE plan, they're going to be showing as actively in forbearance. And again, this can present challenges, especially in the home buying process. If they're getting products like a Fannie Mae or a Freddie Mac, if they have a $0 payment, that's fine if it's under an income-driven repayment plan. However, if they're in forbearance, it's going to default to probably a percentage of their outstanding student loan debt. And I always like to say, so for example, if someone has $100,000 of student loan debt, using a percentage of that as a monthly payment can really impact, again, that DTI if we're looking at $1,000 monthly payment or $500. But if we had them in an income-driven repayment plan, maybe for $50 or $100, that really shores up that end of that student loan. We also have a really big problem in terms of collections or defaults on student loans. Defaulting on a student loan means that a borrower is over 270 days past due. Essentially, collections and defaults and negative credit reporting are beginning. They have begun. And we are seeing drops in credit scores of 100 to 200 points just from the negative credit report of being behind on payments. So if a borrower is over 90 days past due and making a federal student loan payment, then we're in delinquency. And we'll start seeing that on the credit reports. And here's, why we're here, because we have a solution. We've been working with Pam. She wanted us to join today to talk a little bit about our tool. Student Debt Solutions, it helps find a way to reduce student loan payments. It is a comprehensive analysis. It shows all repayment plans for federal student loans. But on top of that, we look at the full situation. So not only how do we get a borrower into a monthly repayment plan that may better suit their financial goals, we look at things like default resolution. If a borrower is in default or active collections, we are going to help create a strategy in order to get that borrower current on their student loans and then into a repayment plan. We also look at cancellation. There's over 9 different legal ways to cancel a student loan. And this is of the utmost importance in order to understand, is this an option for a borrower? We need to address that. Because if we can reduce the amount of the student loan, that's going to have huge impacts for them and financially, right? And also forgiveness. Not only does our product focus on federal student loans, we also address issues with private student loans. So it's all encompassing of all student loan repayment plans that are out there. In the private student loan area, we're not really just leaning into refinance. We use that as a last ditch effort, but we want student loan borrowers to have options for everything. So we go over loan modification, refinance, and a wealth of other solutions for private student loans. We do that based on the lender that they're with. So if there was Sallie Mae or Wells Fargo, we kind of look at the internal programs for them based on each of those lenders and present them with an outline or a solution and how to tackle that debt. The biggest thing is that SDS is no risk. And this is why, because you can refer your client to use the link. It is also used by HUD counselors, okay, through home prep, and Pam will talk more on that later for us. But we do the analysis, we make the plan recommendations, and your clients would be able to see all of that for free. Okay, so this is a paid for product, but only if your client or our client wants to proceed. And proceeding means we're going to give them all of the forms and essentially an action plan or an outline on how to take action on that. And we have expert assistance available. We do that through chat, or the client can enroll in a one-on-one counseling session if that is needed. Okay, so this is a really great opportunity for your clients to just have peace of mind. Maybe they're on the best plan, maybe they're not. And so they can explore all of those options. And if you guys find that, okay, well, they're on the best plan for them right now, they can move forward with that. And again, that's at no risk. So you can see, again, all options, comprehensive. And that's the biggest thing here, is that we always say, it's a no risk and it offers a lot of peace of mind. And the only payments would come in the form of if they just want that additional help. We are a resource in order for your clients to confidently move forward with their student loan repayment. While we're here, we wanted to take the time to just really reiterate and emphasize kind of what we're going to expect the year of 2025 to bring for student loan borrowers. Back in October of 2023, 45 million federal student loan borrowers were now all having to make payments on their student loans. There was a 12-month grace period, or what was called the on-ramp. And so from October 2023 to October of 2024, student loan borrowers were told to resume repayments on their student loan, but there was no impact essentially to their credit. There was no reporting happening to the credit bureaus as far as if there were missed payments, if they were actually in repayment. Okay, so this was known as the on-ramp. But starting here at the end of January of 2025, now borrowers are being reported to credit bureaus. And this is because that's now been over 90 days. So if a client from October of 2024 until now has not made a payment, we're finally seeing those delinquency marks. And so that is, very, very, very important. We're going to see increased delinquency moving into 2025. And I cannot, put exclamation points around that enough. And so we have to be proactive in helping our clients find solutions. We're going to still see the struggling to resume repayments. Now, further, default collections are resuming this year. So this is expected to happen later on in 2025. The federal student loans have the ability to collect through untraditional means like Social Security income offsets or your tax refunds. They are also clients who are in default can have their wages garnished up to 15%. So these are mandatory collections that can happen, and this is set to resume. Once default, we're going to see huge significant changes to credit reports over the coming months as we see more and more clients defaulting. There are currently 5.5 million borrowers in default. And again, those are beginning to register back towards the credit bureaus. If clients took no action during the 5 years that payments, through the CARES Act and the COVID forbearance that was allowed for federal loans, now that we're in repayment and we've got credit reporting happening, those 5.5 million, that default is now going to register again. But we're going to see more and more people move into that default arena. there are important notes for if your client is in default. And I think the biggest one here is that it's going to take time in order to get the default corrected. And so that's, the 6 to 9 months expected. So there are a few ways that clients can get out of default, whether it be enrolling in a program like a rehabilitation, or consolidating out of default, or even setting up a reasonable and affordable payment plan before collections happen. Default does not mean your clients are out of options. And that is the great thing about this type of debt, being that of a federal student loan. There are so many programs that we can work them through in order to, resolve the default. However, again, it's a waiting game. Some programs can be 9 months in length, or even consolidating out of default, although it can take a few months. We want to see some active payments under that now current credit line in order to see the impact and get those scores improved. Okay, so that's the biggest point I'll point out there. Save repayments. We have 8 million borrowers, again, who are in the Save Repayment Plan. The Save Repayment Plan essentially replaced an old income-driven repayment plan. It had some really great, the underlinings and the underpinnings of this program really created a wonderful opportunity for student loan borrowers to really pay the least based off of their income over when we compare it to other income-driven repayment plans. So it reduced their monthly payments. It didn't have interest accrual. However, again, because of the legal hurdles, and there's just a lot of judicial red tape around this right now, we are going to see the SAVE plan essentially go away. And so we need to take action with clients who are in SAVE now to convert from SAVE. So that is going to be, signing up for a new repayment plan, getting them out of the forbearance that they're actively in, making sure that their financial goals can realign with other expected payments on other income-driven repayment plans, because they are going to see a jump in that monthly payment due. And so, again, these borrowers that are in SAVE are some of the ones that literally have not had to make a payment for 5 years. Because of that judicial red tape and some of the injunctions that have been placed on it, we're dealing with borrowers who have not paid in 5 years. And so providing them education and a financial plan and working that into how this may affect their mortgages are going to be critical right now. With public service loan forgiveness, just here to, I think, the biggest thing is that there was a lot done with public service loan forgiveness and sort of streamlining that program over the last few years. Public service loan forgiveness allows our clients to get forgiveness after 10 years of qualified payments. And then the remainder of their loan is forgiven. That forgiveness is tax-free. So this is a really great program that is available for student loan borrowers. There was a lot of reform to, again, streamline the process for student loan borrowers, because there were some issues with public service loan forgiveness, people not getting approved that should have maybe have gotten approved. This program has now switched to being totally under the control of the Department of Education for oversight and to make sure that they're upholding the values of this program for borrowers. We are not going to see this eliminated in the future, okay? And if there is further reform to the public service loan forgiveness program, it is important to understand that that public service loan forgiveness was passed through Congress, and so any acts to try to eliminate or change the existing program do have to, again, be passed through Congress. This is, one of your clients has public service loan forgiveness now, and here's why it can matter. You can have a client that has public service loan forgiveness, is eligible, they're on an income-driven repayment plan, and you tell, the underwriters, like you present that in underwriting, like this loan's going to be forgiven in 10 months because based off their occupation. I know that can have a large impact on potentially not including their student loan debt at all in the underwriting. And so borrowers can be highly anxious right now with just a lot of the changes, but just understanding that PSLF reform, any changes to programs or new initiatives, again, typically apply to new borrowers. So even if there was reform, our existing borrowers who are actively in this program are not going to be subject to those changes. It would just be any new borrower after said date. So, of October of 2026 and moving forward, anyone receiving a new student loan would then have to follow the rules of the program that were set forth at that time. And just to reiterate the fact that we're going to see increased delinquency. We have default. We have, a payment plan that's not really active and it's showing on credit reports, probably in a negative way. Borrowers are struggling and SDS can help them. And this slide just really lays out what we've seen. We've worked with thousands of borrowers. We've been around for a decade offering assistance to student loan borrowers. But in our most recent findings, we deal primarily with clients who have a lot of federal student loan debt, over 94%. 20% of our clients do have private loans. So again, just reiterating the fact that we can help borrowers with federal loans or private student loans. We also, what we're finding have for our clients, there's huge benefits. Our typical client has an average student loan amount of $75,000 with an average monthly payment of about $740. We've been able to reduce monthly payments by 60%. Total repayment, this is the total paid over time. Okay, so really reducing that down to about 50%. We're finding forgiveness for our clients. Forgiveness can come in the terms of being on an income-driven repayment plan, or under some of the occupational forgiveness programs that are out there, teacher loan, occupational or public service loan forgiveness. So plenty of forgiveness opportunities we're finding for our clients. And also cancellation. And this is why it's really important that we have a comprehensive platform that we're not only guiding, borrowers on just payments, but on every option. And we are finding ways to help our clients cancel their student loans. And so those opportunities are out there. And this is the biggest thing. So if you're working with clients, how do you prepare them to come and use student debt solutions? And one of the things that helps us and being comprehensive is because we are able to look at one particular loan file. It's called the National Student Loan Data File. So helping your clients prepare for this is going to help your client be successful in moving through student debt solutions. Your client should have this file and they can get this at studentaid.gov. The reason why we use this file, again, it allows us to be comprehensive because we don't just use a credit report. The credit report shows some good detail about the student loan. However, this National Student Loan Data File is a complete history from the minute that the borrower applies for FAFSA and receives their first loan. The NSLDS file is generated. So it follows them through the creation of that loan and the origination of the loan all the way to what they're doing today. This file is updated every 30 days. So it gives us a really, in-depth view of how they've managed their student loan in the past and what they're doing with that student loan today. And this allows us to understand, do they have deferment opportunities or what types of payment, how much longer do they have to pay the payment plan? And so it allows us to deeply assess their personal situation with their student loans. So again, this is very critical, and you being able to advise your clients that, hey, I think it'd be really great if we can just see your options here at Student Debt Solutions. What they're going to do is go to studentaid.gov. They would retrieve that student loan file. They can download it and they can save it to their computer. It does download as a file that's called a TXT file. Seems archaic. We don't want the client to change the file format from a TXT to a PDF or a Word doc. It does corrupt the file. They will save it exactly as it is downloaded, which is that TXT file. It downloads as the mystudentdata.txt. And again, they want to save it as that file and that file format. We also help if the client is inside SDS, we will walk them through the steps of how to get the NSLDS file. The critical thing is that they do need to have their FSA ID credentials. This is assigned to them when they sign up for student loans, okay? And if they're an older borrower, they may have operated under what's called a PIN number. The PIN number is now outdated, and all borrowers have had to transition to the FSA ID, which is just a username, can be their email, a username, or a phone number, must be verified, and they have a password that goes along with this. They log in with that at studentaid.gov, and then we help navigate to pull that file down for them. Okay. But we lay out instructions. We've got a great booklet that is available for the client to do it themselves, or they can connect. Okay. But just setting up that framework for your clients is really important. It allows for the success. Because sometimes we have clients come that are using SDS and they're like, well, why can't you just connect to my servicer? Why can't I just use the credit report? So just really important. We want to take this moment to let you know how and why we're asking for the NSLDS, and then how to translate that to your clients. Outside of that, the process of using SDS for your clients is really simple. And I'm going to pass this to Dave here in a second. He's going to take it over, but they'll need their, a recent statement if they have private loans, family size and income, or and their tax filing status. We don't do any verifications, but just having that available, if they're aware of, what their annual adjusted gross income was from their most recent tax filing, is great, because that allows us to produce some good repayment estimates for the clients. And then they tell us what their goal is. So, if they're looking to have the lowest payment or pay the lowest total, and that's it. They answer some questions and they get results. It's really quick and easy. And Dave, can you tell us a little bit more about that and pass it over to you?
Thank you, Melissa. I really appreciate that. Wanted to restate a couple of things here really quickly. So I want to tell you a little bit about how SDS works, but let me reinforce a couple of things that Melissa said there that are very important. Number one, she said, why is this important? Well, we know from studies that about 40% of new homeowners have student loan debt. Number two, for the first time in about 5 years, which for most people probably seems like an eternity, you actually have to make payments. There's no more sort of ideas of can we cancel this or that. The administration change has made it very clear that the issue is getting into repayment plans. And why is this no risk? Melissa also said this is no risk for you. The beauty is, and probably part of what Melissa conveyed, is it's a complex world. Student loans, figuring out what to do, what's possible. And the last thing you want to be as a loan originator is trying to be knowledgeable about all of the things that go on with student loans. That's our job. And the reason we make it no risk is that we have a very easy to use platform. Consumers, your clients can use it themselves. They can use it on any platform, PC, tablet, phone, and it doesn't matter what browser or anything like that. Plus, we do all the support. So they have chat support during the program, and we also have expert guidance at the end should they choose to need that. So we answer the questions, we do the support, we have the application that makes it easy for them to figure out what their options are. And all you have to do is reference it and then reference the link. And when they get there, here's what my plan could result in. Pam's going to show you a compared statement that she particularly likes in the SDS program in a minute. Once they get that, you'll get an idea as a loan originator. Well, your payment is currently $740, but it could be $300. And what does that mean now for potential buying power and what mortgages you can qualify for, et cetera? That's your world, but the student loan stuff is our world. Let me give you a quick idea of how it works. Melissa also mentioned that it was free to use, and what we mean by that is when a user, if you see the part up here at the top, when you see that the user creates an account, enters their income and family goals, we don't ask any PII, so this is a very simple process. Now, the income is the adjusted gross income. Not everybody knows what that means. We have tools that help you figure that out, or help your clients figure that out. Or they can also go back, and we have instructions that say, go back to last year's tax filing, look at line 11, I think it is, and use that number. So we have ways to help them figure out what is their adjusted gross income. But these are factors that matter in an income-driven program. Your income, family size, how you file your taxes, married, jointly, head of household, et cetera. And then we also ask about goals. This just helps us at the end of this process. And the process, by the way, is only about 15 to 20 minutes. It's a very quick process. There's no credit card up front or anything else. So at the end of this process, your clients are going to be presented with, here's our recommended solution. SDS recommends that this is the way to restructure and apply for a repayment program or programs to reduce your payments from X to Y. And that's at the end of that program, that all of that is at no cost. But if they say that their goal is lowest monthly payment, which is pretty common, then that gives our program some guidance as to how to make the recommendation. Melissa touched on this, and we can't emphasize it enough. Importing the loan file is very important. This is that NSLDS file for federal loans. And Melissa mentioned it's available in studentaid.gov. We have instructions in the program as to how to get it. Not everyone knows how to get their student loan files, so we have downloadable instructions, we've got videos, and we also take the user right to studentaid.gov so they can log in. All they have to do is log into studentaid.gov, come back to our program, and our program knows where the files is and knows how to get it. So if they have it in advance, that's the best thing. If they don't, we'll guide them to get it when they're using the program. For private loans, we pull a credit report. It's a soft pull. It's no charge to the user, so it's not going to affect their credit. And what we do is we pull all the education loans out of their credit report, compare it to federal loans, and anything that's different is the private. So that's how we figure out what's private and what's federal. There's strategies for each, far more strategies for the federal. And the good news, if there is good news in this, about 90% of the student loan debt that's out there is federal student loan debt. That's the biggest part of the problem. We ask a few questionnaire questions. This is usually 8 to 10, maybe 12 questions. And this has to do with things we don't yet know. In your employment, your occupation type, whether you're disabled or not, if you have disputes with the school, not like, I don't like how much debt I have, but like, hey, they're charging me for this and they shouldn't be. There's strategies and there's follow-on questions for any of those kinds of situations. But by the time we get to the end of the questionnaire, we know a lot about the client. SDS knows a lot about the client. It then goes into an analysis and says, okay, based on everything we know, this is the recommended plan. Now, we'll show them all of the plans available, but inevitably the recommended plan is the best plan for them. And then we give them tools, and I'll show you in a second the kind of information that they get at that moment, again, still without paying for anything, the kind of information they get that would help them decide this is the plan for me, or in some cases, it's not that much different than what I have now. So what we see is once people go through this process, whoops, let me go back. Once people go through this process, they get to this outcomes. Some people are just researching. They're just trying to see what their options are. A lot of times that happens when someone's still in school. They don't pay student loans when they're still in school, and even for 6 months afterwards. But in most cases, they end up seeing a plan that gives them a significant savings monthly that they want to opt into. So if they need the help of Student Debt Solutions, they're not required to, but if they want our help to say, here's the forms you need, here's the instructions on how to fill them out, here's some tools to make it easier for you to fill out large, complex forms, which sometimes can be, tens of pages. It's either $60 to get the forms, the instructions, and we'll touch on that in a second here in the next slide. Or if you think you want a live counseling session as well, I really want to talk. My situation is so complicated, I don't understand it. The client, really want to talk to a live counselor. They can schedule that with us, and it's an uplift to 160 for that. They could start with standard and decide I need a counseling session later, and they can upgrade to that. So it's a lot of flexibility here. And again, it's only if they need the help of SDS to make that plan a reality, and we help them get that done. I would want to comment here too that these prices, because we've been working with Innovative and Pam for now, geez, Pam, I think we've worked together for at least a year and a half, maybe more. We're probably going to hit our 2-year anniversary here coming up soon. We've worked with Innovative Mortgage, and we know that this is a pretty critical time. for your clients, and they're hard pressed with lots of costs. So these are actually reduced about 30–40% from our regular retail prices. So Pam and Innovative have arranged to have discounts if you're using the Innovative links. And we'll explain what that means a little bit later in the section of the program, like, okay, so how do I access this, or how do I get my clients to access this? One last thing here, there's a thing called an action plan. You see in my picture here, it's a little slanted image of a document. That's actually a PDF document that anyone who makes a standard or premium purchase gets this document. They can download it, save it, reference it. It's a complete description of everything they came in with, the decisions they made, the choices they made for plans, how to take action on those plans, complete comprehensive sort of guide of what happened during their session. If one of the reasons we have people create an account is they can come back, they can come back anytime up to a year. That account remains active for a year. They can come back anytime if their family size changes, their job changes, new plans come out of the Department of Education or the government. They can come back, go back into this program here to some step and answer the questions again, or re-input information and say, effectively, are there any new options for me? So that happens a lot. People may want to try it out now, but 2 months from now, they say, well, things have changed. Let's see if there's a better plan for me now. And we want to make that available for people. When I mentioned the recommended solution, this is a busy slide, but let me break it down for you. There's in the center box here is what you actually see. This is the recommended plan, and that's here in the center. This is the part that they're presented with, and all we've done is try to expand and highlight the different sections. Option 1, this is where we break out sort of the highlights. This is what people really want to see. What are my possibilities? We say, okay, the plan you selected, as you said, your preferred plan, or the recommended plan, I'm sorry, gives you 153 in monthly payments. Here's your total repayment. This is how much is forgiven. Forgiven isn't a guarantee, but it often happens. There's multiple different types, so I won't go into the details, but the program knows how to assign forgiveness possibilities. And then these payments would exist over this period of time. This is the term, or 72 months. Now, income-based repayment plans, just to be clear here, when we say that this is the monthly payment, it's not a flat payment. This is based on income. And one of the contingencies of an income-based repayment plan, and payee is one, essentially every year the client reports back to the Department of Ed, here's my income, and the payments are fixed to a fixed percentage, either 10 or 15% of their discretionary income, which means income minus expenses based on the family size and filing status. So those payments will adjust over time. The way that the Department of Ed makes assumptions, we've mimicked that by assuming 5% income growth year over year. Not everybody has 5%, income growth year over year. So this is a starting payment, and it may go up or down as income goes up or down over the lifetime of the term. So I just wanted to touch on that. So that's number 1. Here's the highlights. Number 2, suppose I want to compare to what I'm currently doing. Pam will show that slide here in a couple minutes, but it gives the client the ability to say, here's my current monthly payment and total repayment and term, and here's the new one, and that's a difference of this much savings per month. Pam, I think I can speak for you that you found that particularly compelling as a way to see what the possibilities were. And remember, I don't want to be too much redundant here, but remember, they're getting a chance to evaluate this. They haven't paid anything. They've just come through to see what their opportunities are for lowering their payments. If they have private loans, we also have a section here that gives them referral options to get refinance private loans. There's less opportunities for private loans. SDS has some, others may be refinancing, loan modifications, debt settlement, or even bankruptcy. Now, we're not, SDS isn't recommending any of those plans, but it is saying, if this is something you want to consider, here are links to selected partners that you should be aware of. And then we also, on the right-hand side, we break out what is the federal section and what is the private section. So again, I won't spend too much time here, but did want to tell you that this is how we're helping your client figure out, can they do better than they're doing now? Because as Pam will explain, if they can reduce their monthly payments by X, that can result in Y amount of increased purchase power, or qualifying for a higher mortgage, or getting into a different home, or maybe even getting a mortgage at all. So let me step through. When we talked about the different options, once they get past there, if they select a plan, they'll be presented with this, which is choosing a plan. This is simply like any paywall. We take care, SDS takes care of all of the credit card or debit card processing. You don't have anything to worry about there. So the standard plan, the premium plan, and what it includes, and this just touches on what I just mentioned, that we're providing the forms. If somebody says, I want to get your help, SDS says, here's the forms you need, here's how to fill them out, here's where to mail them, or here's how to process this so that you can make this plan a reality. And if you want to have a live counseling session, you can upgrade to have that, and it's scheduled through Calendly, which I think most people know about that. You click a point of a day or a time on a calendar, and that's where the client meets with us. So again, you provide the link and reference your client, but SDS takes care of all the heavy lifting. We've got support, we've got the counseling, so you're not confronted with too much, well, what's a payee program and things like that I'm sure you're not going to feel comfortable. Some will, but most people won't, as to what to do. So let me hand off to you, Pam. Pam's going to give you a sense now. Hopefully that gives you a sense of what's in the marketplace, why it matters, how SDS works. Now we're going to hand off to Pam, and Pam's going to tell you a little bit about, from her perspective, why this is a big deal, and also how she utilizes this information. Pam?
Thanks, Dave. Okay, this is the infamous best slide of the whole SDS platform as far as I'm concerned. And the reason why you get to compare your current plan to the selected plan that you'd like to get. And on this representation, we've got a current monthly payment of $661 a month, and the selected payment, the payment would go all the way down to $153 a month, which is a savings of $508. And you can also see the overall loan savings, total forgiveness, if there is forgiveness, and then the estimated payoff date. Now, the benefit here is that monthly savings of the $508 a month. And what this is telling you is the extra home buying power that this client has with this lower payment. On this particular selection, the $508 a month savings would equate to a $75,000 increase in loan amount that this client could qualify for. So this is for a $508 a month savings. Now, on this next slide, this is where a National Foundation for Debt Management, a HUD housing counseling agency, shows that on the average $300 a month savings in payment, you're basically looking at a $45,000 to $50,000 savings of that. Savings of payment means that much more eligibility, $45,000 to $50,000 of loan amount that this client can qualify for. That's what we as a loan originator want to see, is if we lower that payment, how much more house is this client going to be able to get? Now, let's recap quickly the benefits of SDS for the clients and the loan originators, and why I think that SDS is the best platform to get a repayment plan figured out for your clients. First of all, you get the lower student loan payment, and which increases the buying power for the client for their home. SDS is free all the way through the plan selection, so you know what the options are. And before the client doesn't pay anything for that. They only pay if they wish to proceed with the implementation of the plan. And let me tell you why that's important. The average hold time for clients to get in touch with their servicer to do any kind of work on their existing loan or a repayment plan is approximately an hour, if not more. And I can vouch for that. I have called 2 servicers myself. One of them, it was over an hour before I hung up. And the second one, I was on for an hour and 20 minutes, still didn't get anybody. So having the ability for your client to proceed with an implementation of a plan on the SDS platform is beyond beneficial to us. SDS has the best chat I have seen on any platform out there. And if a client does apply for the SDS services, they have 1-year access to this. So if their income decreases because they've lost their job or their income just decreases, or they just basically want to go on and see if I want to make higher payments because I'm able to now and I want to pay this loan off earlier, they can do that with the platform. The client doesn't have to requalify for the repayment plan. They already have a loan. They're merely setting up a new plan that they can ease into. Again, these clients can get help on the SDS platform, whether it's a federal or private student loan, and it can help clients that are nearing default or in default, which you're going to start seeing here. And one thing that I don't have on here, but I wanted to bring up, when Melissa was talking about the over 8 million clients that are on the SAVE plan who were put into forbearance. Guess what, loan originators? A forbearance means we have to use 1% of that loan balance to count against that client to qualify them for a new loan. So if you've got an option of being able to go in and see if there's a lower repayment plan, why not do it? It's free to find out what your options would be. I cannot emphasize how important keeping our clients out of default is. These are the ways that I've learned through SDS with their professional help and also what you're going to see coming up here shortly. The reason you don't want your client to get into a default is that it could mean a higher payment, or maybe the loan forgiveness time frame would be longer. The worst thing is that if they are in default, then it takes 6 to 9 months to get that new repayment default resolution going and getting their credit scores back up. And so that stalls your client from getting a home for at least 6 to 9 months if you're having to work with the default. If the client is in deferment or forbearance that stops this month or maybe next month, make sure that they make payments to restart either make their payments or restart a forbearance to avoid any late payments. A lot of these clients have not been paying on their student loans for 3 or more years, and they don't even know what their current payment is. In fact, they don't even recall that they have a student loan many times when I speak with them, and they have to get off the phone and go find out what that payment is. They can find that out on the SDS platform on that comparison of what their existing payment is versus a repayment plan. So that is another benefit of the SDS platform. Make sure your client doesn't stall on recertification of income or setting up a repayment plan. As everybody knows, the student loan credit has been started to be reported as of October 1st of last year. We are already seeing late payments. And Melissa, I think you told me on another call, we were looking at a drop of, you've seen between 100 and 200 points when these lates are starting to show up on their credit report. And again, defaulted student loan options are available on SDS. Very important, loan officers. Current student loans and their payment history are not always showing up on credit reports. You get the previous servicer's report. Yes, that does show up, but I don't know why, but we're not seeing current student loan payment history yet. What I'm going to go to another slide that's going to show you an article you can link into to make sure that when you have any student loan clients that come in, before you give them a pre-approval letter, make sure they get through the Fannie Mae or Freddie Mac AUS system. Okay, so what are your next steps as a loan originator? First, you can go to slide 8 on this deck and follow Melissa's guidelines on what the client needs to enter the SDS platform, or all of the SDS direction is going to also be located at clientstohomeowners.com at the DIY student loan help. And I've got a link here. And then also make sure that your client, while they're there, signs up to see the repayment plan options. And remember, this is free through their plan selection. So let them see what SDS can offer for all of their repayment options. Also, if the client can jot down the payment of the most desired repayment plan they'd like to get, or take a screenshot of what they see, the MLO can then enter that payment into the Arrive loan operating system. And that's where you're going to be able to see how much more buying power that your client can have by doing that repayment plan. Very important. The plan implementation takes about 30 to 60 days to complete. So make sure your client's not out there with a realtor looking for a property and well, they're waiting for this plan to come into effect. You've got a 30 to 60 day headway there for this to happen. Very important. I've got a link here for loan originators to read. Again, this article is on clients to homeowners. It's 3 things MLOs need to do for clients who have student loans. Number 1, the client, these are the 2 most important. The client needs their complete payment history. They can go on studentaid.gov and get their current servicer's payment history, but our underwriters commonly want at least a 2-year history. And so getting that complete payment history for, even if it's with another servicer in addition to their current, they need to get that available, have that in hand, ready to go. The second is that the loan originator needs to run the client's loan application through Fannie Mae and Freddie Mac automated systems to retrieve an approval on the findings. If you do not get an AUS approval and you have questions on the AUS direction or why you didn't get an approval, I absolutely want you to contact me at the phone number and the email that you see below. And finally, clientstohomeowners.com is a website that I made as a resource to assist loan originators with clients who have challenges that are preventing them from getting a mortgage. And Student Debt Solutions is on this site at the link that you see here. Just link in there and you'll get to it. And then the student loan help basically it's a reiteration of what you've seen in here. In bold, you see the link to get into. Again, SDS is giving us loan originators a special price to utilize this service. We need it. And I get no compensation for any of this. I'm just telling you that SDS is by far, from the programs that I've seen and compared to, this one gives us what we need for our clients as quickly as possible. And I was so excited to get on a webinar here and show you all how this works. Again, my information is down here, and I'm going to pass it back to Dave.
Pam, I'm going to stay on that slide for just a second because I wanted to highlight a couple things. Pam made mention of something that's very important, which is at the end of the student debt solutions process, whether your client moves forward with implementing the plan or not, the recommendations they have are essentially just that. They are, if you go through and apply for this plan, you can realize these benefits. Just because they used SDS doesn't mean those plans are automatically in effect. Just want to be clear about that. Our instructions guide the client through what they need to do next, which is to fill out the forms, and we help them with that, and print them out, sign them, and then mail them. Or we're soon going to be having some services to help them with this. But that's the process of applying, sending the forms in to the servicers to apply for the programs. That's where, imagine Black Friday at a big mall and they've got one little tiny door. Everybody's trying to rush into the servicers to get help, which is why it's taking longer than normal. So that's why Pam's guiding you to the 30 to 60 days that it may take before that plan is finally approved. However, our experience is that the calculators we use, which are the same ones that are used by the Department of Ed, are quite accurate and within a few pennies. And so the numbers you're going to get from the recommended plan from SDS are going to be pretty dependable numbers, but they're not etched in stone until the plan is actually finally approved. And I just wanted to highlight that. And Pam, I also wanted to thank you for, Pam was here 2 years ago when, there still wasn't this urgency and crisis that you see now with student loans, recognizing that there needed to be a way to help mortgage loan originators deal with the confluence of issues that your clients come up with. And so we've benefited a lot from working with Pam, and we appreciate the opportunity to do this webinar. As we wrap up here, I wanted to just summarize, there's a few additional links here that you might find useful. As far as Student Debt Solutions is concerned, our website, myresolvent.com, any sort of partner inquiries, which you can go to the MyResolvent site, and there's a link that's called Partner with Us, and it will allow you to schedule a private demonstration, ask us questions, whatever you need to know to get some help with getting yourself set up in the same way that Pam has, if that's your desire. There's also a link here for an SDS video, so you can watch another video, just sort of a video demo. Last but not least, Pam's added her clients to homeowners, where she's got a lot of information. There's no one that's really done as much digging and researching and communicating that Pam has. She's got a lot of very, very useful information on her site, and I recommend highly that you take a look there. So it's all at clientstohomeowners.com, and there's things about DIY solutions and student loan help and the different sites that Pam was referring to a couple of slides back. So with that, Pam, I will say thank you, and thank you to the audience, and to Brian, who was a helpful sponsor of this and helped us make this happen. We appreciate it, your time, and we hope this has been helpful. And so we will leave it at that. Thank you very much.
Thank you, Dave. Thank you, Melissa.